G'day expats and welcome to another episode of Expat Chat, a special episode today as we have our guest on again, our Managing Director for the taxation side, Ben Turner. G'day Ben, how you going?
I'm doing well, thanks, James. How about yourself?
I'm good, mate. We're winding down for the year. We're well into December and it's hard to believe that 2024 is on its way. As I sign off things for clients, I think I'm going to find it very hard to be putting down the year 2024. So, um,
hmm
but we're in that sort of wind down period. I've even seen it with a lot of businesses. Everyone's sort of starting to put out their, I suppose, replies, auto replies, shutdowns, those sort of things. How's the year winding up for you?
Yeah, it's going strong with a bit of a wet sail. So,
Yep.
it's always good to get a number of people's
Yeah.
returns signed off prior to the year. It's a little bit like a resolution, I guess, and you
Yeah.
can go to the Christmas break without having that on your shoulder.
Absolutely, Matt. Absolutely. And it's a really good talking point that I've got for us today. And before we jump into it, a quick disclaimer for those that are watching us on YouTube or listening to us on your podcast channel of choice. Anything you hear today should not be construed as personal tax or financial advice. It's for entertainment and information purposes only. If you do need advice in those areas, well, that's what we do. So please feel free to reach out confidentially. Now let's jump into it. Today's topic, it's a really important one, and it's when, for non-residents, Australian expats specifically, when do they need to actually do an Australian tax return? Because I know over the last couple of years, there's always a bit of confusion of what is actually required, when do you need to do one? So Ben, I thought I'd try and pick your brain today a little bit around that topic, and generally speaking, when, as a high level, I suppose, question, when do you need to actually do a tax return as a non-resident?
Yeah, that's a good question. And I think what's probably also worth mentioning is that not every expat is going to be a non-resident as well.
Mm, mm,
And that sometimes can surprise a few people.
yeah.
Um, you might see situations, particularly in sort of the yachting and those sorts of industries where people move
Mm.
around a lot, where the tax office does take a pretty strict view on residency there, and they may not become non-resident during that particular situation.
Mm,
So just bear in mind, as a bit of a side note, if you haven't considered your residency and you're not comfortable with your residency, that's probably the first port of call because, as you're probably aware, a resident would be taxed on your worldwide income typically in Australia. So that does broaden the scope. But
mm,
for those that, the vast majority of expats who are non-resident when they leave, there's a limited number of times that people will need to lodge a tax return. Um, Effectively, there's a few circumstances when these will apply.
mm.
As a non-resident, you're typically taxed on, in Australia, only on Australian sourced income. So effectively, if you want to think about what income that you've received in the year, is any of that based in Australia? So typically things that we would see is interest from Australian bank accounts,
Yep.
dividends from shares, um, capital gains and losses um, in certain circumstances if you don't deem dispose, and they will
Yep.
continue to then be taxable at the time of sale.
That's right.
Um, if they're taxable Australian properties, so typical one is family home or
Mm.
investment properties, they'll
Yeah.
always be taxable on any capital gain or loss at the time that you actually sell those, even if you're an expat and a non-resident.
Yep.
Um, Another couple of ones that people might not think about is trailing employee share scheme income.
Mm.
So that's
Yeah.
where sometimes you've got like a 4 or 5 year vesting period, and there's a portion of the time between grant and vest where
Mm.
there is an Australian service period.
Yep.
So if that's the case, then that portion that relates to the Australian service still would be considered Australian sourced income and then taxable in Australia.
Yeah.
So
Yep.
bear that in mind. The employer should have an obligation to give you an ESS statement, though, in that case.
That's
So there
right.
should be a bit of a flag um, there so that you actually do get a prompter to do a tax return. Um, Termination payouts that might occur after you've left and but still relate to your Australian-based employment would be another one where we
Yep.
see a bit of a lag between uh, the tax year and when you're actually receiving that income.
Yeah.
Um,
Yep.
And
Now,
and
I might interject and further um, query and ask your thoughts. I mean, whenever I speak to some clients and expats in the past that have just come on as a client, or I'm speaking to a new expat, and their only income might be some interest income or some dividends. I think there's sometimes the myth that goes around that, oh, that's the only kind of income I have because that might be from non-taxable Australian property sources. I don't need to declare anything to the ATO. But I mean, that's definitely not correct because one, there's a few sort of not issues, but disconnects there. A really good example would be share platforms. If they don't know you're a non-resident, well, they don't know to withhold tax on certain income sources. And often when we look at a lot of platforms, the platforms won't automatically withhold, I suppose, the correct rate all the time. There is a legislation piece that governs those kind of platforms that says it has to generally withhold a certain amount, but it doesn't necessarily mean it's going to always hold the correct amount. And then I think interest income is probably the most common one where they're leaving some savings behind in Australia. There's a bank account. They've forgotten to actually tell the bank, oh, hey, I'm a non-resident, so you do need to withhold that 10%. And it does mean if it hasn't been withheld, well, you technically need to pay that at the end of the financial year when you actually lodge your tax return. So I know that's a super common one and definitely one of confusion. And then on the, I suppose the other side of the spectrum, I still come across expats which have an investment property in Australia and they haven't lodged a tax return for 8 or 9 years. And you
yeah, very
just,
common.
it is. It is. And maybe they're paying tax in their other country, but it doesn't matter. Tax at source, as Ben said before, if it's coming from an Australian source, generally there's going to need to be included within a return in Australia. It makes sense,
Even yeah, even if it's negatively geared, you still need to lodge an Australian tax return, and that's a bit of a misconception that some people have. That maybe the tax office won't be chasing you if you're in a negative position, but there is still a requirement to lodge that tax return and make sure that that is carried forward year on year.
Yep.
Another thing that I hear quite often is that the income that they've got is below the tax-free threshold, so isn't requiring to be
Yep.
disclosed to the tax office. Now, obviously, as non-residents, if you're non-resident for the full year, the tax-free threshold is not available, and the first dollar of income that's taxable as ordinary income would be taxable at 32.5%, soon to be going down to 30%. So that is something I hear
Mm.
quite often, and people are quite surprised
Oh,
when you
they would.
sort of raise that with them,
They would.
and
They,
you've got 10 years worth of tax returns potentially to do.
well, I mean, the negative geared one, that's a really good one because I mean, what I like to tell my clients and expats in general is, even if it's negatively geared, that's all well and good. But remember, you want to know what losses you're accruing. Sometimes we might even call that a tax asset that we can use in the future to offset capital gains or,
Mhm.
positively geared income. So in order to plan ahead, don't you want to know what you've accrued over the last 5, 10 years and go, cool, I've got, 50,000 or 100,000 of losses carried forward. That means if I need to sell that property, maybe that'll eat into the gains depending on cost-based adjustments and other things. But you want to know what you've got. That way you can make adjustments and plan accordingly ahead. So it's funny that, yeah, it's negatively geared. Well, is it? We had that period of interest rates being remarkably low. I bet some properties fell into being positively geared
Mm.
territory through that period. I mean,
Mhm.
moving forward, I mean, HEX, what about, the requirement to, is a HEX lodgement different to a non-resident tax return?
Yeah, so HEX, now called HELP, is another instance where you'll need to lodge a return, or at least let the ATO know of your foreign income reporting.
Mhm.
As if you're using a tax agent, then we need to prepare a return to disclose the income you've earned overseas. So this was a requirement that was brought in from the 2018 tax year. So this is 5 years ago now. So still a few people who aren't aware of this as a requirement, who might
Yep.
have been long-term expats, but there are definitely people that have become more aware of it and have reached out for me to prepare the return, and
Yep.
that's typically what's required to disclose the foreign income, not so much to tax that income because it would be exempt, but for the help repayment purposes, and they still use the same repayment thresholds and rates that you would have if you were in Australia, although
Yeah.
with the exchange rate being so low, you don't have to be earning too higher an income to be in quite a high repayment amount. And obviously
Mm.
because there's no withholding, unlike in Australian employment on that income, then you could be out of pocket up to 10%
Yeah.
of your gross employment income overseas. And if you're doing
Yeah.
that for 5 years running, it's not to be sneezed at often. So
No.
I would recommend everyone to really have a
Oh,
look at that
it's it
and get onto it.
it can be pretty punitive. It's a stealth tax, I like to call it, because when you've got sort of professionals heading overseas, expats, they're working either in the US, UK, wherever it might be, and even in, I guess, the Middle East as well, a lot of all the Middle Eastern currencies tethered to the US dollar, US dollar's still quite strong. And then they're in a tax-free environment, but then the stealth tax comes out of nowhere. Their required help lodgement goes, shit, now I've got to pay 10% back on that. Sometimes it might be better to pay it all off because indexation, we had the highest indexation last financial year. I think it was 7.1%. The government will be loving that, rubbing their fingers together. And then this year, it's going to be this financial year we're in right now. Remember, indexation is still going to be quite high. So I guess if you want a guaranteed return, it might be worthwhile doing some voluntary repayments on your HEX because you've got that
Yeah,
voluntary help lodgement coming up. So, listeners, there's a little tax tip or I suppose money tip if you've got a HEX debt left back in Australia, do a voluntary repayment before indexation kicks in on the 1st of June 2024. That's a really good one because it's not going to be anything like 2.1%. It'll still be maybe a 4.5, maybe even higher, 5.5%. Um, yeah, a really good one there. I mean,
yeah.
we've covered a lot of good and a lot of different income sources there. Hex is obviously the main one. What about if, I guess, a non-resident doesn't really have anything back in Australia? They don't have it. They might have a tiny bit of savings, maybe $2,000, a couple of $100, and that's it. Is there still the requirement, do you think, to do some sort of non-resident lodgement just to keep the ATO happy that they're overseas?
Yeah, so it's a good question. When, like, if you've actually had your return assessed and
Mhm.
there isn't going to be future lodgements due, then what you would typically do is mark on your departure year that this is a final tax return. Now,
Mhm.
that doesn't mean that you never lodge returns again in the future. It just
Yeah.
really does flag to the tax office that you're not expected to lodge until your circumstances change. And
Mhm.
as soon as you then lodge a return in the future, because your circumstances have changed, then it reactivates everything from the HO perspective, but it does get the HO off your back.
Yep.
If you don't mark it as final, then the HO will look for a tax return for you each year. So it's quite common for me to look at people's HO pre-fill and see, 5, 6, 7 years of returns that are looking like they need to be prepared. But when
Mhm.
you dig deeper into the actual pre-fill information that they've got, you can see that either they've got no interest or dividends or they've had the right withholding applied to them, so they don't actually need a tax return, in which case we can lodge a return not necessary,
Mhm.
which is a pretty simple process, and we can do that in bulk. Um, it won't let you do that if you've got an active ABN outstanding, unfortunately.
Yep.
So bear that in mind. If you're on the expat journey, cancel your ABN as soon as you become an expat if you're not planning on using it, so that
Yeah.
this is an easy fix. So that's typically how you can go about closing off those obligations.
That's a really good one because I know there'd be a lot of expats that have done some sort of little, maybe side hustle under an ABN, but then they forget about it. They've declared it once in a
Hmm.
tax return. The ABN's still ticking over in the background in the ether. They don't
Hmm.
do that side hustle again, but it's still there. And then
Yeah,
they head
it'll
overseas.
cancel after like 5 or so years, but
Yeah.
the years where it's still active, those 5 years, the tax office won't let you lodge a return not necessary. You have to lodge a nil return, which is a painful process that doesn't really benefit anybody.
No. No.
But so if we can avoid that for everyone and save some pain, then
Yeah.
let's do it.
Yeah, that's it, mate. The ATO bastard. Mate, listen, really appreciate you jumping on today's episode and picking your brain. That's been a terrific episode. Hopefully listeners get a lot of value from that. In the meantime, Ben, enjoy the end of the year, enjoy Christmas. To those that are listening in, enjoy the New Year period, and we look forward to catching up in the new year.
Likewise. Thanks, Jane. Appreciate it.